This is a make or break moment for crypto prices with three big events this week. Number one, the Federal Reserve meeting this week that will affect crypto prices. Number two, the US-China trade deal at the end of this week. Trump is meeting with Xi Jinping. And number three, possibly the biggest liquidity rotation of all time. Three big events that affect you if you hold crypto, and starting with the Fed. But watch today's whole video because they build on each other. This is why you subscribe to Altcoin Daily, for perspective, for an edge investing in crypto. But number one, the upcoming Federal Reserve meeting is happening this week, and they're going to cut, especially coming off the CPI data, which we just got last week. I want to share with you a clip. But keep in mind, we're not getting that much data due to the government shutdown. We did get the CPI data last week, and that basically means there's no reason that the Federal Reserve will not cut this week, and also probably at least one more time by the end of this year. Watch this.
What you had in the CPI this morning is that whatever suspense there was around not just next week's Fed meeting, but the one in December, it went down after this report, right? The argument for the hawks weakened a little bit here. Part of the problem simply is just we're not going to have that much data perhaps before the December meeting. But rate cuts were the path of least resistance before this report, and you lost some of that resistance after the report.
Now, most of you probably already knew the Fed was going to cut. Highly probable. That's probably priced in. Let me give you something you may not know about the Fed meeting, and that they're not only going to continue their easing cycle, their cutting cycle, they're also going to end quantitative tightening. So tightening is bad for markets. It suppresses markets. Quantitative easing, good for markets. They're about to end quantitative tightening for the first time in years. Look at this chart. This is total assets of the Federal Reserve. And as you can see, for the last multiple years/months, it's been decreasing. They're selling assets into the market. They're getting less total assets held by the Federal Reserve. They're selling into the market. And again, selling into the market, that's going to suppress prices. What helps prices if they're buying from the market. So they're selling into the market less and less. They're about to stop, as explained. Most people didn't catch this. I did. I'm sharing with you, as explained by Federal Reserve Chair Jerome Powell a few weeks ago.
Our ample reserves regime has proven highly effective, delivering good control of our policy rate across a wide range of challenging economic conditions, while promoting financial stability and supporting a resilient payment system. In this framework, an ample supply of reserves ensures adequate liquidity in the banking system, and control of our policy rate is achieved through the setting of our administered rates, interest on reserve balances, and the overnight repurchase rate. Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months.
So the Fed is already cutting. They're about to pivot with their tightening, go into easing for the first time in years. And if nothing else, Jerome Powell is about to be replaced by Trump next year when Powell's term ends with somebody even more dovish for the market, is highly suspected. And markets are forward-looking. They're forward-looking. So this is, in combination with a few other things, one of the best macro setups for cryptocurrency that we have seen in a long time. So add in what the Fed is doing. One sec, I wrote this down. We've already had a leverage flush out. We're about to get a new bullish Fed chair. The SEC is pro-crypto. The CFTC is pro-crypto. And the market structure bill is about to pass. This is one of the best setups for crypto I've ever seen. That's why there's potential for the biggest liquidity rotation of all time. And we'll get to that. But the bigger question then becomes, Austin, if it's so obvious, if crypto, the setup is so bullish, then why aren't we moving faster? Why aren't we going parabolic? And yes, Bitcoin's up year to date. Ethereum's up year to date. Bitcoin and ETH have done well. They could do better. The altcoins could definitely do better. So what's holding us back, in my opinion, is uncertainty with one of the biggest macro events anticipated this week, the United States-China deal. Specifically, the meeting that's about to happen between President Trump and Xi Jinping in South Korea this Thursday. And the markets, the market's anticipating something good. Let me share with you what the market is anticipating, and then we'll go over why that might be a trap. So here's what the market expects.
This week, we will likely see at least an extension of the trade truce that's currently in place and set to expire on November 10th, with the U.S. effectively removing the threat of an additional 100% tariff off of the table, seemingly in exchange for Beijing delaying and reviewing its recently unveiled export curbs related to critical and rare earth minerals. The Treasury Secretary Scott Bessent also says that China will resume its purchases of U.S. soybeans, though we have yet to get confirmation on how much and how quickly that will be done. I think it's worth pointing out that we heard from President Trump on Air Force One earlier today, telling reporters that recently launched Section 301 investigation into China's purchase obligations, including for agricultural products like soybeans from the first Phase 1 trade deal, that he's saying that could be taken off the table completely, depending on how these talks go with Xi Jinping on Thursday. Now, there's a few other threads we're watching here, but everything that I just outlined really is a pullback of recent escalation from the last few weeks.
So the market is optimistically cautious. And, obviously, if they reach a deal and it sticks, and this is the end of the China trade war, and the tariffs go back down, hugely bullish. Markets are going to rip. But I think the biggest thing stopping crypto specifically, and I'll tell you why, is uncertainty. All markets hate uncertainty. If it's good news, that's obviously bullish. They can price that in. Even if it's bad news, though, they can price that in because they know what to expect. This uncertainty is not good for markets. And for example, even if Trump were to announce after that meal, the deal is done, we reached an agreement, things are looking good, Thursday night, or let's even say Friday morning, well, he's announced things like that before, many months, as early as June, months after that, as well as even before crypto tanked a week and a half ago. We had the biggest liquidation event crypto had ever seen. We tanked because that's when Trump tweeted out 100% escalation tariffs on China, despite the day before him saying things were going well. This is what he said the day before.
To boost our own independent production of critical minerals, rare earths.
It's necessary,
you can talk about how important that is over the next 4 years, sir.
Well, it's very necessary. In the past, we were able to go to other countries, buy whatever we want, but all of a sudden, if those countries are hostile, and by the way, China hasn't been.
And then the next day he tweeted, nope, 100% tariffs on China. And what's interesting is he did that Friday night after traditional market hours. So the only thing open was crypto. That's why crypto investors are optimistic, yet cautious, heavily cautious, that this meeting with Trump and Xi Jinping is Thursday. Probably won't get a big announcement until Friday. And even then, Trump could always tweet the opposite a day later on the weekend when only crypto's open. And understanding the technical setup, cryptocurrency is right on the brink of bull or bear right now. With that last huge crypto crash we saw about a week and a half ago, we dipped right back down to the 50-week moving average, which has been strong support for multiple years in this bull market. Back at Liberation Day, we dipped down here. Great time to buy. Back after the cool down, after the Bitcoin halving, yet before the presidential election, right at the 50-week moving average, great time to buy. What I'm looking for, and I'm going to put a link down below if you want to follow along with exchange partner Weex or exchange partner BitUnex, link down below for exchange bonuses, follow along, is as long as we can maintain above the 50-week moving average, which today is around 102, 103, bullish. The trend remains the bull trend, and the trend is your friend. If the United States and China manipulate markets with their social posts, and we go under for a significant amount of time, then we're in a confirmed bear market. What I'd like to see is that even if we do crash or dip in the short term, maintain above the 50-week moving average, spend some time here before we shoot up again, allowing these moving averages to catch up. Just like we saw, we consolidated for so long, the moving average was able to catch up. Also, anybody bullish on crypto and artificial intelligence, check out channel sponsor Zero G Labs, home of infinite AI. They are aiming to be the largest layer 1 built for artificial intelligence. I'm going to recommend this to you. I highly recommend watching my deep dive, my interview with founder CEO about 1 month ago. It started Crypto expert warns of AI takeover in 2026, Zero G Labs, link down below. And it's really interesting to see the layer one cryptocurrencies that are building for this AI revolution, which we know is coming. We know that's coming. And that brings us to, of course, the make or break moment for crypto. And what I mean by that is I see the potential for the biggest liquidity rotation of all time, and that's Bitcoin dominance going down and surging into altcoins, altcoin season. I know that's a dirty word right now. I know people are screaming, we're about to go into a prolonged bear market. Now is the time to be selling. But look at this chart. In 2017, altcoin season only happened when we hit this ultimate low and started traveling back up. In 2021, we hit this blue line right here, the ultimate low, and then altcoin season liquidity was able to flow into those altcoins risk on. Zooming into today, actually about a week and a half ago, this last macro crash, the biggest liquidation event we've had since FTX, took us down to the very bottom of this line, exactly where we needed to go. And right now we're at a breakout or breakdown moment for altcoin season. And I'm not claiming to know the future. Anything can happen in cryptocurrency. Make your own decisions. But this chart is very revealing. And also, you want to sort of take out your positions for altcoin season closer to the bottom. You want to sell altcoins when they're up here. You don't want to sell when it's down here. If you made it this far in today's video, click subscribe. It's completely free to do. It costs you nothing. Join this army. Get an edge investing in crypto completely free, because I think this next year, cryptocurrency is going to print millionaires. Just my opinion. That's what I believe, though. And you want to be staying up to date on the market every single day, and it's completely free. So check it out. Give us a chance. Like always, see you tomorrow.